Hey, so Tesla just reported earnings that actually beat Wall Street's expectations and somehow the stock still dropped. Yeah, you heard that right. And trust me, once you hear why, it's going to make a lot of sense. So let's break this down. Tesla came out with its latest quarterly earnings, and on paper, things looked pretty solid. The company managed to outperform what analysts were predicting, which in any normal world would send a stock climbing. Investors love a beat, right? But here's the thing, the earnings report itself almost became a side story, because Elon Musk opened his mouth during the earnings call, and what he said sent Tesla shares sliding pretty quickly after hours. Now, here's the part that's really got Tesla owners and investors buzzing. Elon Musk confirmed something that a lot of people in the Tesla community had been worried about for a while now. Hardware 3.0, the full self-driving computer that was installed in a huge number of Tesla vehicles over the past several years, does not have the capability to run Tesla's most advanced autonomous driving features going forward. Those were essentially his words. And that is a massive deal. Think about it this way. Imagine you bought a car, and you paid thousands of dollars extra for the promise of full self-driving capability. Tesla sold FSD as this future-forward feature, something that would keep getting better with software updates. A lot of people bought into that promise, literally paid for it, and now the company's own CEO is standing up and saying that the hardware sitting in your car physically cannot handle what's coming next. That's not a small thing. That's a trust issue. That's potentially a financial issue for hundreds of thousands of Tesla owners who are now wondering what this means for the value of their vehicle and the FSD package they already paid for. Hardware 3.0 was actually Tesla's big leap when it launched. Elon himself called it one of the most powerful self-driving computers in the world when it rolled out. Tesla spent years installing it across their lineup, and customers were told it would be sufficient for full autonomy. Now we're hearing the opposite. The next generation hardware, Hardware 4.0, which is already being installed in newer Tesla models, is apparently where the real autonomous future is headed. So the question everyone is asking is, what happens to HW3 owners? Will Tesla offer upgrades? Will they be left behind? Those answers haven't been fully spelled out yet, and that uncertainty is exactly what's spooking investors right now. And look, it's not just about the hardware drama. Musk's comments during earnings calls have a history of moving markets in unpredictable ways. Investors are always a little on edge when he speaks, because you genuinely never know what direction the conversation is going to go. And when you pair that with a bombshell revelation about hardware limitations affecting a massive portion of your existing customer base, yeah, the stock dropping starts to make a lot of sense even with a solid earnings beat. From a business perspective, this could open Tesla up to some serious scrutiny. Consumer advocacy groups and legal analysts are already going to be paying close attention. When you sell someone a product with specific promises attached to it, and then later say those promises can't be delivered on the hardware they have, that's a conversation that goes way beyond a quarterly earnings call. The bottom line here is this: Tesla beat the numbers, but Elon Musk reminded everyone that in the world of cutting-edge technology, today's breakthrough can become tomorrow's bottleneck faster than anyone expects. And that really leaves you wondering how many other future-proof promises in the tech world are quietly running out of runway right now?